Welcome everyone. In this video, we're doing a deep dive into American Express, following its impressive third quarter earnings for 2025. The company proved once again the power of its premium-focused membership model. But after a significant rally that pushed the stock to new heights, a critical question emerges for investors. Is the growth story still intact? Is the stock a buy, hold, or sell at these levels?
American Express delivered a powerful performance in the third quarter of 2025, posting results that shattered Wall Street forecasts and demonstrated robust, broad-based growth across its entire business. The company beat expectations on both the top and bottom lines, fueled by resilient consumer spending, strategic product launches, and its unwavering focus on a premium customer base. Let's break down the key numbers. Key financial highlights. Earnings per share came in at $4.14, a significant 19% jump compared to last year and solidly above estimates that hovered around $3.98. Revenue reached $18.43 billion, an 11% year-over-year increase that also surpassed projections. And in a clear sign of the company's profitability, American Express achieved a remarkable return on equity of 36%. The market responded enthusiastically, with AXP stocks surging 7.2% on the news. The growth engines were firing on all cylinders. First, recurring revenue from annual card fees is approaching a massive $10 billion milestone, having grown at a double-digit pace for an incredible 29 quarters in a row. Total spending by card members was up 8.5%, with a notable 12% rise in retail sales. The crucial travel and entertainment sector saw a strong rebound. Spending on airlines soared 14%, while restaurant expenditures grew by 9%. A major catalyst was the highly successful refresh of the iconic Platinum Card. The launch drove an unprecedented surge in demand, with new account openings doubling in the first 3 weeks. CEO Steve Squeri highlighted the company's powerful demographic tailwinds. Millennials and Gen Z are now a core driver, accounting for 36% of total spending, a share now equal to that of Generation X. On the financial side, CFO Jeff Campbell pointed to disciplined expense management and a solid credit performance, with delinquency rates still remaining below pre-pandemic 2019 levels. Management has reaffirmed its confidence, projecting double-digit earnings per share growth for the medium term, backed by strong investments in marketing, technology, and value for its premium customers. Bolstered by this outstanding quarter, American Express has raised its full-year 2025 guidance. The company now projects revenue growth of 9 to 10%, and earnings per share in the range of $15.20 to $15.50. This optimism is rooted in the successful membership model, which focuses on high-spending, premium customers, and the continued global expansion of its merchant network, which now stands at approximately 160 million locations worldwide. In summary, Q3 2025 was another record-breaking quarter for American Express. It showcases a powerful combination: resilient spending, particularly among affluent and younger consumers, effective cost control, and strategic innovation that continues to set the company apart.
Despite this exceptionally strong quarter, it's crucial for investors to also consider the potential headwinds and challenges that could impact American Express stock moving forward. While the fundamentals are robust, several key risks are on the radar. American Express currently trades at a premium valuation, with a P/E ratio and a PEG ratio notably above its own historical average and those of competitors like Visa and MasterCard. The concern among some investors is that the company's compelling growth story may already be fully reflected in the current stock price, potentially limiting near-term upside. The company's core strength, its affluent customer base, is also a point of vulnerability in a downturn. A significant slowdown in the U.S. or global economy could dampen discretionary spending in high-margin categories like travel, dining, and luxury goods. Furthermore, a higher interest rate environment could slow down card borrowing, impacting an important revenue stream. The payment space is more competitive than ever. Rivals like Visa and MasterCard continue to press their advantage, while fintech giants and digital wallets like Apple Pay and PayPal are aggressively competing for consumer loyalty and transaction volume. This intense competition threatens Amex's premium segment and its lucrative co-branded partnerships. American Express is navigating a complex regulatory environment. It faces several antitrust lawsuits and a significant tax dispute with the IRS, which could result in substantial financial penalties or even forced changes to its business model. Increased global regulation also poses a risk of higher compliance costs. The company's strategic investments have driven a notable increase in operating expenses. While these are deemed necessary for long-term growth, sustained high spending on marketing and technology could begin to squeeze profit margins if revenue growth were to slow unexpectedly. With over a third of its revenue now generated outside the United States, American Express is exposed to currency fluctuations. A strong U.S. dollar can negatively impact the value of its international earnings when converted back, creating a headwind for reported growth. While current credit metrics are strong, even better than pre-pandemic levels, analysts are watching for any signs of deterioration. An economic downturn could lead to an uptick in delinquencies, particularly among the newer, younger cardholders that the company has been successfully adding. In summary, while American Express is demonstrating exceptional operational strength and strategic momentum, the investment case is a balance of powerful drivers against notable risks. The company's premium model, loyal customer base, and double-digit earnings growth provide a strong foundation. However, investors must weigh these against a full valuation, a competitive and potentially slowing economic landscape, and regulatory uncertainties. The market will be watching closely to see if American Express can continue to execute its strategy and navigate these challenges as effectively as it has in this record-setting quarter.
So with these impressive results and clear challenges on the horizon, what is the street's verdict? As of mid-October 2025, the analyst community remains moderately positive, but has adopted a cautious stance following the stock's post-earnings surge. The overall consensus leans towards a hold or moderate buy rating. The prevailing view is that while American Express's long-term fundamentals are rock solid, much of the near-term upside may already be priced in at current levels. Looking at the data from major financial aggregators, we see a nuanced picture. Out of approximately 24 covering analysts, the majority are in the hold camp. A significant number maintain buy ratings, while a small minority are outright sell. This translates to a consensus hold recommendation, suggesting a neutral to slightly positive outlook. This caution is reflected in the price targets. The average 12-month price target across major firms falls in a range of roughly $323 to $336. Given the current stock price hovering around $346, this implies analysts see a potential for a slight pullback or sideways movement in the near term. However, it's important to look at the range of opinions. The bulls. Firms like Keefe, Bruyette, and Woods are notably optimistic, with a price target of $394. They, along with Truist and Wells Fargo, both at $375, point to Amex's resilient premium card base, strong fee income, and the growth potential from digital platforms and cross-selling. The balanced view. On the other hand, institutions like J.P. Morgan have a neutral rating with a target of $355. Their stance acknowledges the company's quality, but suggests that after the recent rally, the risk-reward profile is balanced, with limited short-term catalysts for a major move upward. In essence, the analyst community views American Express as a high-quality, long-term holding. The bullish case rests on the company's proven ability to grow its premium customer base, generate durable revenue streams from fees, and navigate the economic landscape effectively. The cautious narrative centers almost entirely on valuation. After such a strong run, many feel the stock is fairly valued, or even fully valued for now, needing either an acceleration of growth or a more attractive entry point to justify new aggressive buys. The final takeaway from analysts is this: American Express is a stock you likely want to hold if you already own it. But for new money, patience for a better valuation might be the prudent strategy. The company's future performance will hinge on its ability to continue executing its strategy and proving that its growth narrative justifies its premium multiple. That's our comprehensive breakdown of the American Express Q3 2025 earnings and the market's reaction. For more deep dives into the markets, remember to subscribe.